The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Hi, everyone. This is Basil Chapman sitting in for the one and only Larry Pesavento. Larry will be back tomorrow. So let's just go straight into, I'm the host of the Tiger Technicians Hour. Usually, this is at 12 o'clock till 1 o'clock every day, noon to 1 Eastern Time. I'm also the author of the Opening Call daily newsletter. So let's get right to it. The S&P futures, you can see on the chart on the left, using Chapman wave notation, is up 34 at 36.16. The high, all-time high, right here is at 36.68, round number high. It's made this rectangle formation. It's got a cup formation. It's got a Chapman wave falling axe formation, which usually says that if you break out from this resistance line right here, this is the daily chart, you can go 1-to-1 to the upside. And I've seen this go 3 or 4 times. So it's a 300% move. And let me just do this. I'll make it a little thicker so you can see. Let's make this blue. And then we'll make this pink. There's the extension, right? And this extension works in a parallel move to the upside. That's the whole thing about Chapman wave parallel, 1-to-1 extension. It has to have the same angle of ascent. Make this pink. And then we can add another one. And this is going to be the very interesting pattern to follow because of a couple of things. So you've got to go to there. That takes you right to the top and make it a different color. Let's make it green. So what we're looking at is this rectangle formation between the low of 3,500, let's call it 3,500, 3,506, and the high of 36.68. Within that, in a shorter time frame, you can get a U-shaped formation within the rectangle that takes you to or just under or just above the previous high, and then other things can happen. Now you can see the same thing here in the 120-minute chart. There's this same pattern, lower highs with much lower lows, starts to form a base, creates a kind of a cup or a V-shaped formation. When it takes out this trend line, there's a chance that on the breakout line, you can get a 1-to-1 to move to the upside, which you've done. In the Chapman wave methodology, let me just show you this real quickly. For those of you new to my work, we're always looking from the lowest low bar to count each successively higher peak. A very simple technical tool. Each higher peak gets alphabetized sequentially, A to G, but it's at the fourth highest peak. Peak A is 1, peak B is 2, peak C is 3, high peak D is 4. At this fourth highest peak, other things can happen. It can recycle. In the Chapman wave instant restart to another 4 peaks. They can just continue the extension to G. There's no H, so this is where you have to reassess. But it's at D where you lift a foot off the accelerator, hover over the brake because other things can happen. I couldn't tell you how many hundreds and hundreds of times here at TFNN Live we've seen these peak Ds have very sharp pullbacks. Can go to an E. This is what happened at 36.68, round number high. Look what happened. You've got your cup formation, fails, makes an arch formation, has a test of the 35.28 low, and now it's starting to accelerate. Had a big spike today, I guess, on the Moderna news. What's the Moderna news? Let me just show you the chart quickly. So it says right here at peak E, the 36.30s to 36.42-ish area is going to be very strong. Resistance today, spectacular move so far. I'll go through all of these things one by one. Let's just see Moderna mRNA. That made a peak D, sharp pullback. It pulled back to the 65 area from the 80-ish, and now it's trading. Closed on Friday at 89.39. It's up 13 points because I think it's 94% success rate so far. It's even better than the 90% that we've heard elsewhere. So now what we're looking at is 102.30. It's up almost 13 points. And that is going to break, if it holds through the opening, breaks above the peak D in the weekly chart, peak D in the monthly chart, and extends high. In this case, it'll be A, B, C, D. This will extend leg D in the weekly chart. So it's a very simple technique. There are a lot of other things, and I'm going to be discussing this in detail in my webinar coming up this coming Thursday. Can't believe it, so soon. And this is what we'll be doing. Look right here, Basil Chapman live all-day webinar, and it starts at 9, finishes at 4:30. Go to the front page of TFNN, check it out. It costs $2.95. You get my opening call newsletter, and we've had some really great trades. We are long the Dow from the day of the low, March the 23rd. We are also long the IWM, the Russell 2000. Got some really great positions. Bought a position on Friday at 8:39, called my screamer section, and it's trading right now at 9. Closed in the 870s, the 60s, 70s on a Friday. So there's a lot of things going on. And all these techniques we go through throughout the day, step by step. You can ask questions. We have plenty of time to go through every single thing with absolute parameters that you need to be monitoring. You add a moving average. I know Larry doesn't use moving average. Everybody has their own techniques. I never put any other person's technique down because I think every technique is valid if you make money. And believe me, this has been a fantastic year. We've done our options and the Dow made 400 to 600%. So we'll see what happens here. All right. So let's get on with our story. So the S&P, that was the S&P futures. Very strong move, but still in a containment area of this rectangle. And if it breaks to the upside, I suspect we're going to have to call that new leg C, and it should get to a D. But what's really interesting is another very simple technique that I use. It's called the Chapman Wave Inside Track Repellent Propellant Zone. Look, you take previous highs, you draw a trend line. How easy is it to draw a trend line? There's no thinking, there's no nothing. You just take the upper levels, you draw the line, and then under it, always like a 3/16 or something like that, very narrow up channel. And then it could be a down channel, but in this case, it's an up channel, and it gives you what I call the Chapman Wave Inside Track, in this case, repellent zone. So a close above the green line, a decisive close above the green line in the 36, let's put it here, 36, call it 3680s, would say that is a breakout of significance. And look at this, the monthly chart. The reason why I've been so bullish is that on a short term, a little cautious here. We raised some cash, but we still have some very good positions. But we want cash for a sudden decline. And why? Because this is a leg B in the monthly chart. If we are to get to the D that I usually talk about, then that means 2021 should see higher highs. It doesn't say who's going to win the election, who's going to not win the election. It doesn't say anything about elections. It just says, based on the technical pattern of the charts, using a technique that's been valid for 20-something years, we should get to a leg C, a peak B, meaning a lower high at some point, maybe it's December, who knows, and then a new high for leg C, a peak C, and then a leg D. And that can take you all the way into February or March. I'll be right back. Basil Chapman sitting for Larry Pesavento. The S&P futures are up 36, the Dow futures up 470. I'll be right back in a moment with all the details.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading operations, the best way to use the TAS Profile Scanner to profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we are back. This is Basil Chapman. I'm the author of the Opening Call Daily Newsletter and the host of the Tiger Technicians Hour, noon to 1 p.m. Eastern Time every day. I'm sitting in for Larry, and Larry will be back tomorrow. We're looking at the, let's just do this again from the beginning. So the Dow futures are up 464 points at 29,874. If you look at the Dow contract itself, the cash contract, remember they call it the Dow Industrials, and I, for ages I've been saying, what are they talking about? Change the name. It's called the Dow 30. It's just, for me, it's a perfect vehicle. Everybody jokes and says, the Dow, you can. Wherever the Dow goes, believe me, it's really important. And if you look historically, yes, you can get outperformance in one of the indexes, but the Dow is, for me, the benchmark. It's been ever since I've been in the market. So for decades, I've been using the Dow, giving a call on the Dow every single day. But I do that with the S&P. I do it with all the other indices, but the Dow is the one I focus on. And the Dow 30, I think, is in a perfect situation. The mix is really good. We'll see if that holds true into 2021, but this is only a leg C. In the monthly chart, it should go to D. Look what happened at the previous peak D at 29,568, the fourth highest peak in the Chapman wave methodology. February of this year, it goes from 29,500, has a little bit of a pullback, just 39% to 18,213 in March, and then a spectacular V-shaped pattern. There's a big rectangle plus a V-shaped pattern. So this says that in 2021, regardless of what happens politically, geopolitically, economically, whatever, we should get to a D. That's just the way it works. Let me go on to the S&P cash, SPX, because the S&P futures right now just went through. The S&P futures are up 33 at 36.15. The cash index closed at 35.85. I didn't get to draw this in, but you've got yourself the rectangle formation. It's really potent. And it says in this, you've got a little mini peak A and a leg B right now. The monthly chart, the weekly chart had a doji candle. That's really important. What does it say? It says that within 2 sessions, that's 2 weeks, out of 3, there should be at least 2 higher closes above the high of 3645.99 that was made a week ago on Monday. If it does that, that's very positive. If it closes below the candle low of last week, which is it filled the gap. It went down to on Tuesday. It ran down to 35.11. If it closes under 35.11, you're just back in the rectangle sideways containment area. So that's the S&P. Let's go to the QQQ, which is the NDX 100 trading vehicle, Invesco Trust Series, down just 11 cents right now, 290.82. But wait a minute, it's down when the S&P and the Dow futures and the Russell are up sharply. And that's what we've been talking about for months. I've been saying, I suspect that the leadership in the QQQ is going to undergo a sideways consolidation. That consolidation should be trapped between 303 and 260. A break of either side would be positive, but there's a good chance it's just kind of stuck for now. We'll see if this is a period of rest. And that makes it very clear. Let's go to the NQ. This is the futures. Futures made a peak D. Remember in the Chapman wave, D's where you've got to be a little cautious. Peak D is still in a cup formation, but those are the parameters that we're looking at. A close, I'm not sure it'll do that if the rest of the market is good, but the 14 period moving average, the black moving average of 11,740, that's key support. And I just have to tell you that the open of Monday's close a week ago, which was at 12,139, just keep that in mind. A close above that would be very positive on the shorter term. Okay, let's go to the IWM, which is the Russell 2000, trading up 3.06 right now at 176.50. This is really good action. While almost all the others fill the gaps, that Monday, Friday to Monday of last week gap, that is the Friday before, to the 178.10 high. This only dipped, the low on Monday was 169.33, and the low on Thursday was 168.34. This is outstanding action. We've been long since 173. We were long earlier on. For the big rally, I think it was in early October, that big rally there. We got out, then we missed it going up because we were busy with other things, but we did get back in because I think that the Russell 2000, for the first time, has a chance to at least take some leadership, maybe for a little while longer before it has another big rest. But at this particular point, it's leading. Look at this. Chapman wave falling axe. Look at this. Sorry, Chapman wave right here. Under the umbrella of my techniques that I'll be teaching on Thursday, all-day session. Check the front page of TFNN. What a perfect time to do it. Here's a mini downtrend. The amount of money, you get my newsletter, which is a really detailed, I sent out about 10 charts or more over the weekend, just detailing everything in great detail using the Chapman wave methodology. And so really the cost of it, because you get my newsletter for free, and for those subscribers of mine who come in, they will get a month free added to their usual whatever they've enlisted for. But most importantly, what's going to happen is that I'll teach techniques like this Chapman wave inside track resistance line. Look, broke out of it sharply. So it's 1 week last week. This 1 week the week before. Last week closed above it. So this is 2 out of 3 weeks so far. This will be the third week. Let's see if it closes above the trend line of 163.19. So far, this is very good action. And these are all the techniques. So imagine, so it's $2.95. You get my newsletter for free. The cost of the whole day, I mean, think about it. You call a plumber. I had a plumber just recently. Just comes in, comes out. Unbelievable bill. I mean, this is like if one trade, one little mistake would cost you more than my entire 7 hours of talking. And you're not following me and saying, that's fantastic. I'm asking you, what would you do next? Why would you do it? What are we looking at? There's the Chapman wave falling axe breakout pattern. Are you going to use it? Anyway, so let's go on. We've done the IWM. Let's go to gold. Gold pulled back sharply earlier on. Now it's come back to even. So it's at 1886. But look, this peak D, look at the time that it's consumed. This is a very bullish pattern in terms of consolidation because it's taken since the high that was made. I think it was back in late July. No, it was August, first week of August, 2089.2 in the continuous contract. And it only pulls back to the recent low in the 1850s. So this says to me, consolidation. But my big thing here, and we don't have it for subscribers to my opening call, but I'm looking at silver. I've been speaking about this since the breakout here in the single leg, A to the upside in the monthly chart. If this is only A, and it should go to a higher B, and then a higher peak C, and a higher peak D, instead of this being a single leg A failure pattern, that would happen if at any point silver closes under 19, and it's at 24.6 right now, down 14 cents. Peak D last week. It's just consolidating, but this is an even stronger pattern than gold as far as I can see. So this is very positive. Let me just quickly do time flies. Let me go to the dollar. The dollar is up 9 ticks at 92.82. I'll talk about that as well when we get back. There's a lot to discuss. We got the euro. Oh, we got those. Look at sugar. Look at this unbelievable chart of sugar. We got long EPA, which is fun.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So let's go back. This is Basil Chapman sitting for Larry Pesavento, and it's my pleasure to be here. Larry will be back tomorrow. So look at sugar. Sugar's up in the 40 range back in 2011. It's a little bit of a pullback. It goes to 9s, and now it's trading at 15.44. And look at the pattern that we always look at here. This is, you see, there's a little Chapman wave falling axe formation. Lower highs and much lower lows, like an expanding cone. I'm always talking about peak Ds. Let's just see. Look at this. We go back to the weekly chart back in, was it around about September of 2020. Just count these peaks. There we go, peak A. That's the same, peak B, peak C. There's your peak D. Right at what? the 200 period exponential moving average. How important are moving averages? Well, if you don't use them, they're not important at all. If you do use them, you don't need them until you need them. What do I mean by that? Look, the 200 period moving average for sugar, continuous contract, it broke down. Look, it became support way back in 2016-17, around about the 22 level. And then when it broke down, it was done. Do you need a 200 period moving average? Absolutely not. But wait a minute. When it comes back, it invariably tries to tackle it, and then it's very often gets repelled because it's taken so long. And then what happens is it gets repelled right on the line, the orange 200 period moving average, and then it's tested it out of 5 weeks. 5 weeks. 3 times it's tested it, and this week it broke above. That's a weekly chart. That is very impressive. So it doesn't say fantastic that now you can go long. It just means this is very good. If you are long, that's very good. If you are not long, you want to go long, then you have to go to shorter time frames and see what's happening. So that's that. Let me just show you the TLT. This is the bonds, the Lehman 20-year Treasury Bond Fund. It's just stuck in the lower range. Showed my subscribers over the weekend with all those charts with very detailed analysis. I said, look what's happened. The bond yields, this is the chart on the left here. You'll see in this black background chart, the TLT is the Lehman 20-year Treasury Bond Fund. But this is the yields. This is the 30-year yield. The white one is the TYX. It went to a leg E in the weekly chart. It just tested the left side high over there that was made, what was that? I think it was somewhere in June maybe. And then the brown is the TNX, the 10-year yield. It just broke above it. And the 5-year TYX, the cyan one, hasn't broken above that June high. So we're looking at many things. Well, one of the things that I love to look at is look how close they were all together. Look at the top that was made back in November of 2018. This goes all the way back. I don't want to do that right now. There's a lot to go through, so let me just show you. But look at the width between the 30-year and the 10, and the 10 and the 5. So I always look at that, and I think that disparity, often you get something that comes back again. So I think that yields right now are not the issue. But what is the issue is that the yields have had an effect on the Philadelphia Housing Index. And look, it made a peak E at a 415.20. It's pulled back. It's been struggling. It's been spectacular, going to highs, and now it's starting to digest. But look at wood, which is the iShares Global Timber and Forestry ETF, at highs. I mean, this is in leg D. So that says to me, keep in mind that if you're looking at world economies, HG, which is the high-grade copper, look at this, leg C, it's very positive. Leg C in the weekly chart. Copper is doing something really important. It's turning this yellow Chapman wave stalk leg formation into a Chapman wave propeller shaft, one-to-one extension from that low, and it's already done that. So this is very good because it's saying internationally, the world economies are actually doing a lot better than people are talking about. Question in the den, I'll go to it, XLE. XLE is the energy ETF. Yes, nice spike to the upside, leg C, Basil XLE, please, currently long. Stay long. I think this is important. I looked at them in great deal over the last week. We've had other things that we've got. I mean, there's just so much you can do. So I'm in a way, I'm upset because the IWM, the Russell 2000, is in the area of underperformers. Energy, the Select Energy Spider Fund, fits into this whole category that maybe, even especially now, with the Moderna, was it Lilly? Pfizer with the Pfizer possibility that the vaccinations are going to do something very positive, is saying, you know what, high-grade copper having held so well, did I just do that? High-grade copper at a new recovery high is telling us, and the market not pulling back thousands, everybody thought if there was a suggestion that Biden could win. And you remember I spoke about this, I showed the charts. Let me just show you this one more time. We'll get back to the energy in a minute. I showed you the charts right here that under Democrats, the market actually does does even better. One of the reasons is they usually get it at the lows. So look at this is Obama right here. Huge, a massive move to the upside. Trump comes in right here. So he's had a pretty decent move. 4 years is only 4 years. So who knows what's going to happen next. But in fact, you can't base all your thinking on Democrat, Republican. Things happen, and things that you don't expect happen. So with that in mind, let me just show you that the XLE, which is energy, which theoretically under a Biden administration, from everything you read, should be, I mean, there should be a problem here. It doesn't matter. It made this U-shaped formation, arch formation in the monthly chart, with a U-shaped formation in the daily chart. The weekly chart is these downtrend lines. It's a down channel, and it's trying to tackle it with the MACD strong, stochastic improving, on-balance volume, the blue line really good, and relative strength, the little gray line in the weekly here, holding very nicely. So that says, yes, there's a chance that a counter-trend rally, I'm calling it, at least for now, a counter-trend rally, because it's way underneath that peak A that was made in the monthly chart, could succeed. And if it's a C, it should go to a D. And that says to me the 36s is probably an area. Why? Because if you're looking at the weekly chart, the resistance is at 36.60. I'll draw this in now, make this green. Look how easy these techniques are. You just take straight lines and you use them to the best of your advantage right here. There it is. So now we're inside this little candle right here, a gap-up candle on a Monday, another gap-up candle on a Monday. Unbelievable. Look, gap up, huge gap. This is the second gap. So I do think that this is a positive, even if there's some filling and backing and filling. But it's saying that, at least for now, the XLE, the energy sector, has a chance to move higher, and then we get the test of residual strength or internal weakness persists. So yes, congratulations. Good. AXSM, I want to get to some other things as well. AXSM, very nice, up 134 at 75.52. Now, a couple of things I wanted to do right now. I wanted to show you. So das Wheat is at a peak C, very unusual. So I don't like to do this because in the Chapman wave I have a very strict methodology, but every once in a while there's a failure, and the only way you can add a peak C is that there's a chance that there was a second high that was just a little bit lower that really made like a phantom peak, and that becomes a peak C2. I'll talk about them when we get back, but wheat is pulling back, and I'll do the other.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
So looking at the E-mini, it's only up 25 right now. So that peak D in that 10-minute chart, I drew the rectangle, drew an inside rectangle. It's gone under it now. So there are a couple of things that I wanted to just mention here is that for the Chapman wave methodology, I have a technique that I call the Chapman wave trend gauge. It's based on Richard Arm's short-term trading index. It has actually nothing to do with Richard Arm's work. The couple of times I ever heard him live, turns out right at that moment I disagreed with his thinking, but he has this fabulous index. I just use the numbers. In other words, if they are very high, it means that within 2 sessions, the E-mini should have a 9 to 11 point rally. Even if there's a sharp pullback, it should beware that there could be a sharp rally. And if it's very low, it means that the Dow the next day would have a negative move to the downside, and it's usually early in the morning. Every once in a while, there's something that happens just like this, that I get a reading and it's very low in the trend, and the next day the futures are up huge and the market's up huge, and by the end of the day, for only once or twice in 3 years has it pulled back very sharply. Once it was up 350 and it got to a plus 70 in the Dow cash, and then it went back up again. So it kind of worked, but it never went negative. So I call that a scratch that didn't succeed. But in June, we saw it twice. It went very low, and we had huge futures opening. And by the end of the day, the market was negative. Today, I think it's a mix that we've got the high trend saying 9 to 11 points. Well, 40 points is a lot more than 11, but at least a good rally in the S&P and the Dow. And then I think there will be some kind of a pullback. I don't think there needs to be. I think it's going to fail. I don't think we're going to go down that much. I do think we're going to be pulling back. Maybe that we've seen the high, but I don't think we're going to go down to maybe just the Dow 80 points up or less, or the S&P only 12 points up or less. I think this is going to hold, and there's a reason for that, because there's good news about the vaccines. There is a good news about the market holding through the election rather than just crashing like everybody thought it would. So to me, this is a good sign. So let me just show you here a couple of things that I wanted to do. I just finish up. I just wanted to show you. So the TLT. Let me go back to this. Sorry. That's the bonds. So this said, I suspected that we would be in a trading range in yields, that the Fed would have to do nothing right now, that there wasn't incentive for them to lower it, or just for them just to say, hey, let yields go wherever it is. We have got a lot more to worry about. And I want to see what the impact is on things like housing. And so far, housing is not a big deal, but housing is not going to a new high. So that's really important. So if you put this package together, it says that the rotation into likely grains, I had a question about the BTC, which is Bitcoin. Look at this, Bitcoin is up 245 at 16,515. For subscribers to my opening call, we went long in the 12.40s, both short-term and long-term, because I had a lot of questions coming in for weeks about when do you think it's time to get into the Bitcoin. And I said, I think it's going to be this coming week. And then enough subscribers asked me, could you do the Bitcoin? And I had a look at it and I said, let's get in right now, even though it might be early. It was turned out it was maybe 2 days early, but it gave me the incentive to get in. Perfect timing. On the 14th of October, 1248 and 1241 is trading at 18.38 right now. It hasn't made that extra leg to the upside, but is acting really well. And here's the Chapman falling axe with the oval 1-to-1 extension. I drew this in for my subscribers to say, here's the 1-to-1 extension based on this propeller shaft pattern in the Chapman wave methodology. 1890s is my target. Well, it's only gone to 1849. We'll see if this happens. But look at this weekly chart. I'm calling this a leg B in the monthly chart for Bitcoin. This is the GBTC is the symbol, and it's for the, if I ever remember the name, it's the Bitcoin Investment Trust. It changes Grayscale, actually. That's the thing that changed, Grayscale. So we have Victor in Paramus, New Jersey. Victor, how are you?
Good. I'm going to ask you for two. First one's PLTR, and the next one's RIDE. Where would you buy these at? PLTR just had their earnings out on Thursday.
PLTR did?
Yeah, they're like an algorithm. They're like they follow everything you do. They track everything you do. That company. It's an IPO.
Oh, okay. Gee, everything I do. That's.
I just sold it at 1660.
Okay, I got a problem there if they follow everything I do.
PLTR.
Okay. Yep, I got it. Volunteer check. I know it because I have it for my subscribers. It's right here in my opening call, Traders Corner. I have it right here. It says Thursday, all day Chapman Wave webinar, live practicing of the patterns techniques. And then at the very bottom of the first opening paragraph, I say, PLTR, IPO, been watching, was on my buy list today, gapping up. Now we have to wait. I actually like it as an IPO. It's done so well. The opening 5 days where it opens up in the 10 to 11-ish range, it had a pullback to the 9 area. Hasn't broken that. It's gone to peak A, B, C, D. This is peak E at 1706. I think that this is in play, but it's an IPO, and I don't have to tell you that for IPOs, anything can happen. We have no real history. There's just a single leg A up in the weekly, single leg A up in the PLTR is the symbol, trading at 15.96, up 16 cents. To tell you the truth, to jump in at this level, I would lessen the amount that I would have put in. But if you do want to, you're looking at it as a potential to buy, maybe to add to as a longer-term position or as a trade.
Well, I just sold that. I heard it's like the next Google, so I was going to buy like 10,000 shares, but I just don't know if I should buy it now. It's all over the place. The average two range is $1.19 a day. Is today a blow-off top, or are we going to go higher?
So here's my recommendation. Split your money so that you can buy some right now at 1604, knowing that it's up the upper end of the range, that it has a chance maybe to spike a little bit more to about the 17s, but there's a good chance that over a period of 3 weeks, you'll get an opportunity to get it for another tranche that you can put on. I wouldn't put all the money on now. It's an IPO. That's really, no matter how much you believe in it, your risk is that there's no history. So I personally have nothing to gauge on other than the shorter term, and my Chapman wave works perfectly for shorter term. But I can only say there's a leg A in the monthly. This A could pull back, and if it pulls back, you get in now and it drops to 10. That's still an A in the monthly, but you're down 60%. So I'm just saying to you, start your position here. Start your engines, 15.99, 96, anywhere around here. But that is only your entry point because you're wanting to buy it. If it breaks, you buy it now and it breaks into the 17s, that's fantastic. You got yourself a point or so profit, an 8%, 6% profit. But if you're looking longer term, I would say have patience. See if you can get it in the 1420 to 1340 as your next small entry. But rather build your position up.
Sounds good. Hey, could you check RIDE later? You were kind of right on RIDE, too. That had a nice pullback.
Excuse me. I'll be back. Thank you.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman sitting for Larry Pesavento. He'll be back tomorrow. So let's just do this quickly. This is a very brief section. So for Victor, yeah, this is leg C and RIDE, R-I-D-E. RIDE is, this is electric car. Yeah, so all those electric cars, I-N-O, is it N-I-O? N-I-O. Let's see what they're doing. I said on Friday that I thought they were making some kind of a short-term top. So I'd said to you that RIDE is lagging, that it could play a little catch-up. It's in leg C. I think it should go to a D. I'd just be a little careful there. But all of these, I think very short-term, the electric vehicles are undergoing pressure. So let me just do this quickly because I don't want to run out of time. Let me go back to the Dow. For my webinar on Thursday, all-day webinar, I'll be discussing all these patterns. I'll be discussing what happens at a PT, what happens at this rectangle type pattern, what happens when you go from an arch formation to a potential cup formation. These are easy techniques. What I love about it is that there's no real mathematical part of it that says, oh my God, like I read Stocks and Commodities magazine every month for the past 20 years or more. And there are very few. If it's not in English, I have a tough time. So I like that. I like it as simple as possible. So look, there's been a retest of this top of 29,000 933. We went to 29,896. Days young, but I've got those indicators that suggest there could be some weakness here. How the market holds up through the rest of the day is going to be really important. But so far, we're looking exactly at what we wanted. The IWM, which is up 1.2% right now, up to at 175.53, is kind of leading the pack. Dow's up 0.86%, S&P's only up 0.45. And look at the QQQ, the index 100. It is only up 0.06, but holding. So I suspect that there are buyers out there. I suspect the rotation is going to continue. The fact that money has gone into Bitcoin, the fact that money is going into energy now, as long as fund managers can find a place to be, it's going to be important. I don't think right at this moment, I would be careful of new entries unless you're looking at the technicals being very strong. Watch this closely. This is going to be a very important week. I'll be back for my show at noon this afternoon. Check out my my opening call newsletter and also the webinar coming up on Thursday. All these techniques will be discussed in detail. Have a wonderful day. Hope to see you at noon. We'll do